Hello traders, Mark Chapman here. I'm the creator of the trademarked Trap Traders concept. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is the 3rd of January 2017. I'd like to wish you and your family a very happy new year, and I hope this year is going to be a very profitable one for you. And I'd really love it if you continued your journey along with me into the fascinating and profitable world of trading traps. And today we're going to start the year off with a bit of a bang, hopefully. The Federal Reserve is actively hiking interest rates. That makes it the dominant currency at the moment. So this, from a fundamental perspective, is an absolute pleasure, no-brainer really. So from that perspective, that's a great thing. From a trap perspective, then we are going to be taking a look today at trap break pullback. And the way these traps work is you have a level of historical support. Alright, so price bouncing off a level of support on several occasions. What you want is you want it to do this more than twice as a minimum. So obviously the more the merrier. If it's touched 3, 4, 5 times. The reason why that's good, and the reason why I encourage you to select levels and be very interested in levels that are touched more, is because people wrongly believe that the more level of support or resistance, in this case support, is touched, the stronger it gets. But that's not true. And that's good for us, because what that does is that means people have eyeballs on that level. Also what it does is it makes the level more obvious. And again, if it's more obvious, more support resistance type traders are going to take those trades, and ultimately if that ends badly for them as price drops through the level, then that's going to catch more traders out, and that's going to mean that there's more people trapped. And as you can see, this has actually been touched several times off to the left. You just can't see it. So touched once, twice, so there's your minimum standard, although it's been touched more than that. And then you get the 3rd, 4th, 5th touch in here as it comes in again. 3, 4, and then in there 5. So if you can't see that very well, meant to be a 4. There you go. So the trap break pullback is when you have a very defined, obvious level, touch more than twice, minimum of 2 touches, nice and clean, not a big mess, meaning the level's been violated several times and it looks something like that. Nice and accurate, like this one is, because again it just adds to the fact that people are going to look and like that level and they're going to trade off it. And what we need is our opponents to take those positions, because we're going to trade against their positions. So what we're going to do now is we're going to go and take a look in more detail what's happening here. But in essence, what we're trying to do is we're trying to watch for the price to bounce off the level and give the impression to those support traders that what had happened here, or historically, is going to happen again when price comes back into the level. And if you think about how this looked, imagine you're at the hard right edge and you didn't see this price action yet, it hasn't played out yet, and you're looking at this looks very much like it's going to play out like it had done historically, right, and make people money. Now if you are just witnessing that, that's going to be the type of price action that's going to entice you in off the sidelines. It's going to make you look at that and go, oh, do you know what, I think this is going to work as a support level. Maybe there's a doji in there, maybe there's an engulfing candle, maybe there's some sort of morning star candlestick formation, a swing pattern, something that convinces you in that it's actually potentially going to work. And here's the thing, it's really in that sort of first quarter of a move that people are going to actually act. Because if you think about it, if this is a level of support and resistance, and people had made money all the way across that level when they traded it historically, at some point these people must have got in the trade, and now they're not getting in the trade up here near the end of the move, and they're not really getting in halfway up the move, they're getting in that first quarter, right, this area here. And that's why this is so important, because this is where those traders who trade off support have to make those decisions to commit capital, to take some risk. If they don't come in off the sidelines because they're not convinced by the price action when they're looking at these levels, then they're not going to take any trades. Why would you, right? If you get a level and price, you think it's a level and price comes screaming down through the level, then you might not take that trade, right? Because that would be dumb. Whereas if price comes into the level and then starts to react as you would imagine it was going to prior to the actual reaction occurring. So it was based on your historical analysis that you did have what you thought to be a decent level of support. Then it bounces off the level you're thinking it's going to work, and this is where you come in off the sidelines. Everyone's different, everyone enters for different reasons, but this is where the capital is committed. So let's go and take a look now at this area in a little bit more detail so that we can get a bit more of a sense of what's going on. Now I also want to draw your attention to this area on the chart, and this was that other touch of support. Now it's a very strong trappy move. A lot of people might consider that as a demand level, where basically price comes to the level and it backs and fills and then it explodes away from that area. It's actually a trap as well, and what this means is that there is definite demand in that area, because you've got people who were maybe going short in there who got caught out and they're trapped in this area here. And if that is so, if we can understand that, then those sellers who thought price was going to continue down, if price comes back into that level, they're going to think what exactly? If you put yourself in their shoes and they remained in that trade, they're going to want to exit, and they're going to want to exit at break even. Because imagine you went short in here for whatever reason and you found yourself over here. You're not very happy about that, right? And your motivation for taking a trade is shifted from wanting to make money, which is your original motivation when you were selling for whatever reason in here, to just wanting to get out of this alive when price is up here, and break even would be considered a major result. So you're very motivated, if price does ultimately come back into the level, to exit. And if you exit and you were selling originally, you must buy to exit. So what that creates is demand, and the sheer fact that price exploded off that level the way it did would suggest that you have demand. Now just keep that in mind as we go forward and take a closer look at the level in question. So what has happened in here in a little bit more detail? Let's zoom in. So price comes into the level, and this is where those traders are going to get that first opportunity to bail out at break even. Also, there's demand in this level anyway, because of the way that that move historically that we've just been looking at exploded off the level, right? It just went vertical off the level, meaning there's more buyers than sellers in that area. So as it comes back in, those guys who were trapped, those guys and girls who were trapped in that original move that we looked at, are going to bail out at break even. So that's going to create demand. You're also going to get people trading off here as support traders, so they're going to want to buy off here, and that's going to create demand as well. And people who think there's demand in this level, supply demand traders, they're going to buy off here too. So every which way you look, this is potentially an area where you'd expect to see some demand. And lo and behold, price bounces off the level, and this is precisely, sorry, I've just gone a little bit too far. This is precisely what we refer to as entry cheese or entry crack, right? It's the price action that will convince the trader in off the sidelines to say, you know what, this looks like a good place to go along. I believe that as it had bounced off there historically and made money, and then come back and bounced off there historically and make money, and come back and bounced off there and made money historically, it's looking like it was the last time it was in the level. It looks very much like that. If you focus in just on that first quarter of the move and you were to look over to the left, you would oftentimes see this, and it would look very, very similar. So this is what convinces you in to actually spend some money. This is the entry cheese, the price action that tempts you in off the sidelines. So you've done your historical analysis, you believe wholeheartedly that this is a level of support. You take a trade, you place your stop where the vast majority of people would attempt to place a stop, below this level somewhere, right, somewhere in there. And then as price continues to go up, more people pile in, so you're in, you're long, and then lo and behold, price fails at the level. It comes back, it bounces one last time, and then it's gone. And what's happened in there is it's trapped those traders who believed that this was a solid level of support. It's trapped them in those long positions, because all they knew when price was going up from the level, imagine this wasn't here yet, they just knew this information here, and this would have been enough to convince the vast majority of people in. Just think about it from your own perspective. What makes you act at a level of support and resistance? What has made you act at a level of support and resistance historically? And that is what is going to tempt them in, and that's what catches them. And then when price starts to roll over and go against them aggressively, now they're in trouble. So they're either being stopped out, the stop losses are being hit, or this is the moment where they'll start considering cancelling stop losses and averaging into positions, getting into all kinds of trouble. Now, as price breaks, we now know something about this level we couldn't have known historically looking at this. Now we know something about it, and what we know is this. We know that there are traders in here who are trapped because humans don't like to lose, that hold on to losing positions, that come outside of the trading process, that make mistakes, that cancel the stop losses. So when price is in here, we know for a fact there's people still in here trapped. It's just human nature. We also know something about this level, that there is no more demand at that level. Because if you think about it, the demand that was there, that made this move explode off that level of support before, and the demand of people buying at support and people exiting at break even who were trapped from in here perhaps, or before then even if they didn't get out the last time it came in, these people are the last remnants of demand. In fact, this little bounce here is the last remnants of demand. So if price is down here and we can be confident that that was a level of demand, then what's that saying about this move? Right, this area, there's no more demand left. There's only likely going to be supply, and the supply comes from the following. The supply comes from the fact that there's traders who are going to trade break pullbacks into that historical structure. It's just a very common trading strategy to take a short off the underside of some level, right, that had been support, and the idea then is when it comes back into here, this then becomes resistance, right? So there's going to be supply there because there's that type of trader taking that trade from a break pullback, right? So the supply there first and foremost. We know there's a demand issue because the only reason price can be down here, if we were very confident that there was demand in here and that there was demand in here, and now it's down in prices here, there can't be demand there anymore. So that's the next thing. So we're just trying to figure out whether or not this makes sense to take a trade. Now here's a really interesting part to this equation as well. There's going to be supply here because not only will traders be trading the underside of that level, but you're also going to have the traders in here who are trapped, who were buyers, exiting their positions at break even. Because if you were buying off that level of support and it breaches and you cancel your stop loss, let's say your stop loss is under there and you cancel it and say, oh no, what have I done? If price comes back into that level, the first thing you're going to do is you're going to bail out at break even because you realize the level's gone. So if you were a buyer, then you must sell to exit that losing buy trade to get out of break even, or as near as damn it to break even. It's more selling, more supply. So not only are you going to have supply off the fact that traders are just going to trade the underside of that break pullback because they just believe that's resistance, but they have no understanding of the psychology or the order flow of that structure like we've just described. And the fact that that demand that was definitely there has now been chewed through and there's none of it left, then it means that the likelihood, the balance of likelihood is that there's going to be more supply there than there is demand. That demand has kind of been taken up, and now supply is the most likely outcome. And we know that there are traders trapped there because of the trap break pullback, right? So he's the trap. He's the break, he's the pullback. We know there's supply in sellers there anyway because those buyers will want to get out at break even. So net what this creates is, you know, a pretty high probability sell trade in the euro dollar, and then obviously the fundamentals that we talked about earlier, that just adds a lot of weight to this trade. So if you'd like to learn more about my trading traps, essentially what we've done is we've spent over a decade now, it's probably into 13 years now this year, hacking the trading strategies of other trading participants, right? We're talking about literally everybody who takes part in the market, where we've hacked their strategies and reverse engineered their strategies, we've deconstructed them, and we know when they're in trouble and we're trading against them. So whenever you take a level of support resistance, or you're trading a retracement or something like that, you need to understand that there's people like me who are waiting in the wings for that to go wrong for you, and then we're going to trade against you. So if you want to be on the right side of that equation in 2017, click the button below, come and join me in my inner circle. I look forward to seeing you there.